Welcome back, everybody. It has been a crazy week. It has been a very, I would say, productive week, as well as a lot of lessons to be learned this week as far as the markets are concerned. Um, but yeah, I hope everybody had a good week trading and just a good week overall. I wanted to go through this first week of the FTMO challenge and just break down more in depth the trade setups that I took and why I took them, some mistakes that I made along the way, and how I'm going to be able to learn from this and ultimately go into next week with a lot more of an edge, just knowing certain things about the system, especially in a live market situation. I have tons of back tested data reviewing this stuff. But when you're back testing, it's kind of like you're testing things in a vacuum. There's a lot of elements at play, whether it's emotions, patience, like hesitation, um, just whatever the case might be. FOMO, revenge trading, over trading, all of those things are kind of happening at an emotional level, a psychological level. But if you have the system and you know it inside and out, you should be able to avoid most of those emotions and most of those mistakes. So, yeah, there was a couple instances this week where just looking back on things, I definitely shouldn't have traded two setups in particular, or I should have traded differently. There's one setup in particular that I should have never taken, which was on Thursday. And then on Monday, I broke my rules, which I'll show you here. Is this setup right here. I broke my rules on Monday, and instead of making 4,000, I broke even, which I don't have. I don't have rules that dictate to me setting stops to break even. I let the trade play out one way or another. So I wanted to go ahead and just play this in replay mode. I'm going to still have like the setup actually outlined just so I don't miss this for whatever reason. Let me just go ahead and offset this a little bit more so it's out of the way. Sure, let's just do that. All right, so just to excuse me, just to recap a little bit, I've already gone ahead and set up my Fibonacci's. All of my Fibonacci's are typically set up from either a 5-minute leg, 15-minute leg, or a 30-minute leg. I like to look at the 5-minute because the 5-minute is usually more accurate, especially for those Fibonacci levels within the first hour and a half of New York Open. In addition to that, I use this 4-hour candle, which is always highlighted here, gives me the high of that candle, the low of the candle, and the open, and just kind of tells me where we're at in terms of that 4-hour being bullish or bearish, or about to flip bullish or bearish, right? Because you can anticipate those flips after we sweep highs or lows on a previous 4-hour candle. And you can take advantage of that move that happens for the next 1 2 3 hours after that 4-hour candle has opened at 10 a.m. Eastern. So again, this is NASDAQ. I know a lot of people trade NQ. It's very similar. There's a little bit of a different pricing in terms of, like, if you look at where we're at on this chart, 24,350. It's going to be different on NQ, okay, from like a numbered price perspective. So just keep that in mind if you are trading NQ. This is going to be a little bit different if you try and review this yourself. But the setup, the fundamental strategy works the same on NQ. I actually back tested this on NQ, mostly on the back testing link I'll leave in the description. And now I'm applying it in the live markets on NASDAQ 100 on the CFD side, and it's working the exact same. Okay. Also, I want to preface this by saying I don't trade ES, I don't trade SMTs, I don't look at these other assets. All I do is I look at NASDAQ on a daily basis. I trade my system, and I don't care what else is happening. Right? I literally just follow this plan. I'm sure there's going to be a version of this as time goes on that I'll be able to refine my system, whether that's some sort of trade management system that allows me to let winners run and really maximize my profits, or if that just looks like setting stops to break even or taking partials at certain levels. I haven't back tested that way of trading, so that's not how I trade. but eventually that might be the case. So let me go ahead and just go one at a time here. I haven't actually used the replay mode in a while, but let me just make sure I'm going to click this right. Okay, so right here is where I got my inversed fair value gap. Okay, and this blue zone that we're currently looking at is a 15-minute bullish fair value gap that has not been inversed yet. Okay, it's very important that you keep an eye on these 15-minute bullish fair value gaps after that 10 a.m. Eastern open. What I'm looking for is I'm looking for this 1-minute inverse fair value gap. A CISD is kind of like an additional confirmation, which we didn't get. I mean, there's two ways you can look at that. You can basically say, well, we got the CISD here, so we got it actually simultaneously as the IFEG happened. Or some people might say, well, I like to actually go off of the, the top of the move that was responsible for moving down before moving up. But it just depends on who you talk to. I've heard people explain CISDs differently. I like to look at them as both either or, right? So like this is a CISD and this is a CISD. This is definitely a more, I would call it valid CISD, just because this is, a little bit of a, like this is a change in the state. There's no doubt about it. This is a change in the state. But if you're looking at this from a little bit of a higher standpoint, that could also be maybe the change in the state that you're waiting to take place. But for the sake of my examples, that was my change in the state, right? So I get my IFEG, I get my change in the state at the same time. What am I doing? I'm now waiting for a little bit of a pullback because this move happened very quickly. And so that's exactly what happened here. I got a little bit of a pullback. I think it actually pulled back more than that. Yeah, it actually came back and tapped into the IFEG right there. And this is really interesting. So it's retesting the CISD and the IFEG simultaneously. What does price do next? Boom. And that's not a coincidence. There's a clear reason as to why it's reacting like that. Okay? And this is how you can gauge these sniper entries. Now, if I wanted to be more precise, I could have set my stop to the CISD and gotten like a 1 to 3 had I let this trade play out. But keep in mind, I broke my rules on this, and you'll see what happened here in a second. So we get like within a point. I think my actual take profit was set at that 236 level, if I'm not mistaken. And we got within a point of my take profit. And keep in mind, this is the first trade I'm taking on this FTMO challenge. Now trading this in the live markets, I guess you could say, right? So I'm pretty excited to get my first win. It's a Monday, my first trade on the challenge. And then what starts to happen is we start to get a little bit of a, hesitation. It actually just missed my take profit. I think it would miss my take profit because of spread. But I know for sure it missed my take profit because I got stopped out at break even. And that's what I did. I put my stops to break even, which again, if I hadn't have done, you'll see why that was so important to not do that. Let me just hit play. Okay. So I had my entry here. Yeah, that makes sense because I had this high targeted. I was at like a 1 to 1.5 in this trade. So this is what happened, right? I come up, I almost hit my TP, and then it comes all the way back down, gets stopped. I get stopped out at break even. And then it continues to actually rally and hit my overall target. Now, how I could have optimized my entry because I got both of my entry trigger confluences simultaneously. I got the IFEG and that CISD. What I could have done in this instance is simply put my buy limit at the CISD, which would have definitely been filled, right? And I'm sure a lot of other people did that as well, and it worked out for them. Then I had, stops below there, and I could have just simply targeted this 236 level originally, and this would have been a 1 to 3, and I would have been out of this trade in 4 minutes, roughly. It would have triggered my trade 1, 2, 3, 4 minutes. So I would have made $6,000 in 4 minutes, but instead I made nothing. So Again, this is why it's so important that you follow your system to a T, because this trade in of itself would have started me up 6% on the FTMO challenge. Now, I can't think like that because that's obviously not what happened. Let me just go ahead and reset that. Okay, yeah. So I'm going to try and keep my risk to reward setups on my chart, but I'll have to remove everything else for the sake of the other examples. Now, the other thing that was happening here was we actually tapped the 705 level perfectly, and then it also rallied, right? So there's a lot of things happening here. We're within a bullish 15-minute fair value gap. We're bullish on the 4-hour candle. We have our IFVG. We have our CISD. We're tapping the 705 level. We're retesting both, like, three things at the same time: the 705, the CISD, and the IFVG, all at the same time within a bullish 15-minute fair value gap. I mean, this was like A plus 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 plus, just absolutely beautiful. Had I actually just put my entry at the CISD instead of, trying to front run this and get excited and get in on the trade and then set stops to break even. But hey, live and learn, right? So let me go ahead and delete this so I can show the next example that I took. Just gonna go 10x. And this might take a minute, so I could do a little bit of talking because we're gonna actually wait till the next day, which I believe is way over there. Okay. So let me see if I can. I don't want to jump to a real-time chart. Oh, you know what? Let's just go ahead and change the interval so we can go faster. Again, it's been a minute since I had set this up. So like we'll stop it around like 7, somewhere in there. You can see I already have my fibs and my other setups are already ready to go. All right, we'll just go ahead and hit pause right there. Good stuff. Drop down to the 1 minute. Let's go ahead and look at this now. Okay. All right, so these trades. Okay. These are also, the first one was a textbook setup, okay? So this bluish zone was a 15-minute fair value gap. It was a small 15-minute fair value gap, but it was still a fair value gap, okay? Now, the thing about this setup was the first setup was fine. Like, it was in line with my system. So right here was the inverse fair value gap that I was waiting for. So we tap the 236 and the 15-minute fair value gap at the same time. I'm waiting for a reaction. All right, there we go. So that right there was my entry point. Now, because I'm getting, so you could look at this and you could say, oh, well, Brendan, you're getting an IFEG and a CISD simultaneously. You're absolutely right. There's actually one right here. So what could I have done? I could have put my entry at the CISD and allowed for a little bit of a pullback, which we got. See if we get any more of a pullback. Yep, so that definitely would have triggered it. And I could have targeted these highs for a 1 to 2.7 instead of the 27 extension, because I really am just looking for a minimum of 1 to 2 R. And again, we didn't get that. It wouldn't have played out even if I had targeted just the 0 level, because when we're delivering off of the 27, or excuse me, when we're delivering off of the 236 level, I'm targeting the 27 extension. Just goes hand in hand, right? But yeah, overall, that's okay. This is in line with my plan. We're bullish on the 4-hour candle. I got all my confluences there. Okay, let me go ahead and delete this and just make sure that this is more accurate. Yeah. Okay. Actually, let's just try doing this. So I know it's for sure accurate. Okay. I like to keep my risk reward tools there. So now this is where I screwed up. Okay. I took a reentry, and the problem with this reentry was that this 15-minute gap that I was looking at had actually been inversed on the higher time frames, and I just wasn't aware of it for whatever reason. I just didn't take a second to double check that. And so this trade should have never happened. So that's where I got my entry to go long. Now, if you look at this, we just have the IFVG, which is right there. We just have the IFVG, right? Now, it's not bad. You'll see why. It did start to really play out in my favor. Came back to retest the, where my entry was a couple times. Like I think it retested like 4 or 5 times, which is crazy. And we did actually tap the 0 level. Now, what I wasn't aware of was that there was actually a 4-hour bearish fair value gap to the left that I just didn't have marked up and I wasn't looking at. And so rather than trying to, get a 1 to 3 and target that 27 extension level, I probably should have just targeted the 0 level and had a little bit of a better buy limit situation where I had moved my entry to either consequent encroachment of that IFVG, which is just the midpoint, or just the top of the IFVG, right? If I had done that and targeted just the 0 level, I would have gotten a 1 to 2.5, and we would have been very satisfied with that. So again, this is why like your entry point specifically is so important, because if your entry is late or for whatever reason it's just off, your risk to reward is going to be drastically different, or you're not even going to win that trade with this system, right? So I'll go ahead and just reset my setup here. Again, so that's where I was. So I was pretty confident in this once we had broken the 0 level. We had some really good bullish price action. We were very bullish on the 4-hour time frame. What was happening? Well, we were coming up to 11 a.m. Or excuse me, we're coming up to 12 p.m. My time, which is 2 p.m. EST. That is when this 4-hour candle closes. And I don't like being in trades when this 4-hour candle closes, because the next 4-hour typically will create some sort of pullback, which you'll see it did right here. Yeah, so just like that. As soon as that new 4-hour candle opened, it totally dumped. And that's why it's so important to get your entry right and to target something that's at least a minimum of a 1 to 2 R. But what's the most likely level that we're going to go and take? It's the 0 level. Now, this is a little bit of a outside of the norm situation, because this trade should have never happened. And it is what it is. I'm going to learn from this and always double check those 15-minute bullish fair value gaps. So I can't even consider this as like, oh, I could have made. No, I shouldn't have even taken this trade. It's just that simple, right? So we're on Tuesday now. Monday, I should have made 6%, but I made nothing. Then on Tuesday, I lost 4%, and I should have only lost 2%, right? So I went from being 0% to now down 4%, where in this case I should have been up 4%, because I should have only taken this loss and originally been up 6% minus 2%, net 4%, right? So you can see how I'm in the inverse of the results I should be at, just because of these couple little things that I'm screwing up as I go, right? Now let's switch over to the 15-minute and just zoom on over to the next setup. Just make sure I got all that deleted. Okay. And right there. Whoa, let's back up a little bit. Drop down to the 1 minute. All right, so this blue zone is actually a 15-minute fair value gap that was previously respected right here overnight. This was during like late Asia session, early London session. And so there's a 15-minute fair value gap right here that was created from the previous day, like that previous 4-hour candle that basically destroyed this setup, created a 15-minute fair value gap, which I had marked up, and I was anticipating that, if price, right now we're sitting at 744, so let's wait for the new candle to open. All right, so there's our new 4-hour candle. Now, what I was anticipating is if price decides to flip bearish, well, it's going to be delivering out of this 15-minute bearish fair value gap because the open of the candle is right underneath that blue fair value gap, okay? Now, what I had to wait for was I actually had to wait for a pullback. So you can see I have this Fibonacci marked up. This is off of a 5-minute leg, I believe. So we'll just wait, and I'll show you what happened here. Okay, let me just go to the 5-minute. I think I actually had a different leg marked up. It might have even been the 30-minute. Yeah. Okay, so what I had was I basically took this is rare, but I actually had this marked up. So I had the 705 level. I mean, this technically would have been 705. That would have been where price would have tapped into, but that's essentially the leg I was looking at, was this move right here, to see if that Fibonacci continued to be respected. Let's drop down to the 1-minute. So I got my inverse fair value gap right here. Pretty obvious this time, hey? Got my inverse fair value gap. I got my change in the state right there. Now, when you look at this, I could have, again, my entry could have been better because I could have set it at the top of this IFVG, right? And then put my stop above the IFVG. But I won this trade. This trade did play out. I can't really complain about that. So let's go ahead and click play. There you go. So I got this for a 1 to 2. And at this point, I was now break even on the account because I risked 2%. I went from down 4% to 0% break even on the account. Okay. Had I been following every rule, every trade more closely, rather than being, at break even, I would have now been up 8% on the account, which is crazy because the difference between these little things we're talking about is either 0% or 8%, which is either $0 or $8,000. So that's why it's so important that you're precise in your executions. Okay. So again, I should have had my sell limit at the IFVG, putting my stop above the IFVG, and then I should have gone ahead. So we're delivering off of the 705 level originally, and so that actually dictates that I'm targeting the 27 extension. In this case, it would have been the. Oh, sorry, I'm looking at the wrong fib. Yeah, there we go. Okay, so yeah, we're tapping into the 705 and the 23. Yeah, there we go. The 236 is down here. I'm like, what is happening? So that 30-minute leg, we're tapping into the 705. We created that IFVG, delivering out of a bearish 15-minute fair value gap, bearish on the 4-hour time frame. I'm putting my sell limit. In this case, I should have put my sell limit at the at that low of the IFVG, targeting the 236 level. I would have, instead of had a 1 to 2, I would have had a 1 to 3. And guess what? I would have passed this FTMO challenge on Wednesday had I followed my rules 3 days in a row. But again, I can't think like that because we don't live in a perfect world and we are flawed. So, I'm doing my best. I'm learning as I go, but I'm realizing as I'm trading this in the live markets, market executions are not optimal, especially for the CFD side on the 1-minute timeframes. You're just not going to get the precise entry you want. I use a risk calculator on MetaTrader 5 that allows me to set my sell limit at a specific point, put my stop loss at a specific point, and doing that calculates my risk percentage-wise for me. So I don't have to worry about what lot size I need to input. It just calculates my risk percentage for me, okay? So I absolutely love that for that reason. But yeah, I mean, I'm looking at this going, man, I gotta rely on sell limits and buy limits at this point because I'll get more precise entries. I'll have a better risk to reward. It'll give me a couple minutes to properly react to getting that trade set up on my MetaTrader and just making sure that my target and my stop loss is in fact accurate and everything is in line with my plan. Let's go ahead and just reset this to be where it was entry wise. There we go. And let's just delete that. So yeah, that's Wednesday. Let's go ahead and look at Thursday now. Let's switch to the 15-minute, which is down there. Okay, so this was a loss. Again, this was a really good learn. This is actually where I realized how important creating these sell limits were because we had this move so fast that it's as a human, you can't expect yourself to react in like within like microseconds. It's just impossible. So what I was seeing here was price had created this bearish 5-minute leg, which I can show you on the 5-minute right here. So it created this bearish 5-minute leg, right? I went to the 1-minute, and then I'm waiting for price to either come back or hold on. Let me go to the 15-minute. So there was. Let me just go ahead and. All right. So yeah, there actually was a 15-minute bearish fair value gap right here. It just hadn't been totally confirmed yet on the lower time frames. Let me go ahead and back this up again. I just want to make sure you guys are seeing the same confluences that I'm seeing when I'm trading these. Okay. So again, we had price come down, create this 5-minute bearish leg, and now I'm waiting for price to do that, which it did. And I got excited because I'm like, oh, yay, we're getting a nice reaction off the 705 level. That's my favorite level to get a reaction off of. Then what I got to see is this fair value gap get inversed. And that happened very quickly. Like this 1-minute closed, and then you'll see like I tried going over to my MetaTrader and executing this short, and within 30 seconds, not even like 10 seconds, we'd already moved down here and my entry was late. So my entry should have been here when in fact it was there. So this is why I'm just going to make sell limits and buy limits standard going into next week because I've learned this the hard way. Okay, so now you can see that we actually have a CISD right here. And so I lost this trade, just to give you some context. I lost this trade, okay? There, I lost it right there. Okay, so I lose that trade. What I should have done is this. I should have let this candle actually like happen, set my sell limit at the CISD with stops above the candle responsible for that IFEG. You can account for spread a little bit, give it a couple extra points. And then because we're actually bouncing off of the 705 level, well, the 50 level in this case is where we broke below. I typically like to target the 0 level when that's happening, which is exactly the risk to reward I would have gotten. So if you see here, we actually did have a retest of the CISD, right? It's gonna happen there. So we got a retest of the CISD, and then what did it do? It went straight. It would have gone straight to TP. That would have been a very clean trade. I've got an IFEG protecting my entry or my stop loss. I've got the CISD as a point of interest that I know price is more than likely going to retest if it decides to just continue dropping. So it's all good though. Again, this is why I do these reviews and I, record everything that I actually execute on a daily basis, because I don't want to pretend like I am, not taking these trades. And obviously, I mean, I don't know why I would showcase losers if I was lying, but I'm gonna just keep showing you the real results here. All right, so that was Thursday. So at this point, I believe we were break even coming out of Wednesday, because we had that win the day before, and so we're break even. Now we're down 2% on the account. Okay, keep in mind, I would have passed this challenge had I followed these rules and these entry like these entry rules associated with buy and sell limits. I would have passed the FTMO challenge, or at least the first phase, yesterday on Wednesday, but that's just not the case, because I decided to get all antsy about it. But the cool thing is we have new opportunities and a second chance going into this next week, and I'm super excited to start applying everything I've learned, and just at um, be better at this job. Ultimately, that's how you have to treat it. You have to treat it like it's a job, right? So this was like super obvious to me. I know a lot of people that made money on Friday from shorts. It was just very obvious. I mean, look at this beautiful fair value gap on the 15-minute time frame. Okay, we actually inversed this bullish 15-minute fair value gap, which is what I was anticipating price might come into, and then flip this 4-hour candle bullish to go long, but that didn't happen. And so if I go ahead and switch to the 1 minute and just make sure I go like one more candle, let's go one more candle, one more candle. Okay, go back to the 15-minute. This is now where we inversed this bullish 15-minute fair value gap, but we created a bearish 15-minute fair value gap, because this candle has to close, which let's just wait another 15 minutes. So this was nice, because it kind of just chopped for a while, and then once that 15-minute candle actually closed, well, I'm already showing you spoilers. We got the confirmation of this 15-minute bearish fair value gap. This is a 5-minute Fibonacci that I had marked up from that high of that bullish candle to the low of this bearish candle's wick. Then I go to the 1 minute and I look at this and I say, okay, cool. Let's wait and see what happens when we get into this 15-minute bearish fair value gap, where we have a 50 level there. We're also bearish on the 4-hour candle. This is looking pretty good. It's looking pretty juicy, right? Now, this is where we got our V-shaped recovery. Boom, got our V-shaped recovery. And this is where I got my inversed fair value gap, right there. Absolutely beautiful. Now, one thing I waited for was actually the CISD, because I wanted to get a little bit more of a confirmation. And we also had price just absolutely rip right after. And so what I did was I went ahead and set a sell limit. I actually set a sell limit this time. It took 4 days for me to learn my lesson, but hey, I learned my lesson, and I set my sell limit at the CISD. Now, the one thing I could have done better was my stop loss placement, and put it just above this IFVG instead of way above the high, because I actually do have the CISD in this case. And because we're delivering off the 50 level, because we broke below that 236, and we're essentially delivering out of that bearish 15-minute fair value gap, we're breaking below, and I'm getting that CISD after the 236. I just targeted the 27 extension, just a little past the 27 extension, just because I wanted to see if I could get a little bit more profits out of this trade. And sure enough, we had price that came back and retested the CISD perfectly before ripping to my target, just like that. And this ended up being a massive play if anybody held this. Like I got a 1 to 1.7 out of this, but I could have gotten over a 1 to 2 out of this. And if I had let this, if I had held this for the rest of this 4-hour candle, because that's typically what I like to do, at least for the first 3 hours of this 4-hour candle. Like we're sitting within the first hour of this 4-hour candle still. And one thing I noticed is on the hourly time frame, we tapped into a bearish hourly fair value gap right there. And so how price moves is it will take out internal, then internal, then external liquidity. Okay. So any kind of bearish fair value gap like this is internal liquidity. Where's the most logical point for it to go next is external sell side liquidity, right? So this is internal buy side liquidity. This is external sell side liquidity. Okay. So we click play. Look at that. And that's where we're currently at. That's the live market that closed on Friday. So I could have held this trade for like a 1 to 6, which would have ultimately allowed me to pass the challenge, even with all the other mistakes. But I'm grateful because I made all those mistakes. I learned my lesson. I actually followed the plan. I adjusted how I executed the setups on Friday, and I ended the week in a win. So I can't really be disappointed in myself whatsoever. I actually am learning things as I go here about my system and about this, what is actually needed in order for me to, potentially take a short in this situation. But I mean, this setup was so obvious. It was so screaming obvious that I hope most people made money on Friday because the shorts were there. Even if you had traded this V-shaped recovery on this 1 minute IFEG off of the open, you would have banked some money even just trading it at that hourly unmitigated fair value gap. So yeah, I mean Friday was really good. Friday I actually have the best backtesting results. I have the highest win rate on Fridays. I just got to get more precise with my entries and stop losses, and I will have a better R. I will have it'll force me to have more patience with the buy and sell limits being at the CISD or the IFEG, whatever the case might be. Wow, that rhymes. That was cool. So yeah. Anyways, thank you for watching. This has been a recap of my first week trading the FTMO challenge. My strategy is actually the first video I posted on this channel, and I talk a little bit about how I use the backtesting data to find like cross-reference the data to figure out how to put together a strategy or put together a system that has a higher win rate and has a higher R. I typically like to have a minimum 1 to 2, optimally 1 to 3 risk to reward ratio. And then, my system, I believe, has around a 60% win rate. So that's a very good win rate for that kind of risk reward. If you're aware of the ratios that you should expect, but obviously I didn't execute it to the best of my ability this week. We'll see what next week brings, but I'm definitely going to be stepping up my game and being much more patient, much more specific with my entries. And you know what? If price decides to come back, or if price decides to inverse a fair value gap, create a CISD, and for whatever reason doesn't like to come back and retest either of those things, and it just takes off without me, I'm honestly okay with that because based on what I'm seeing so far, I would much rather have precise entries than bad entries and then end up losing those trades, right? So thank you for watching. If you've made it this far, I really appreciate it. If you could leave a like on the video if you found some value out of this, or hit the subscribe button if you'd like to follow along and watch me turn into a FTMO funded trader and ultimately become a prime trader, then a supreme trader. Then I eventually do want to look at the possibility of getting a job interview at QuantLane, which I think would be absolutely insane. That'd be like a crazy achievement. Like that would be like a long-term achievement, like probably like a year or two from now. But I do think there's a real possibility as long as I can follow my system and be disciplined with it. So thanks again, and have a great day. See you on Monday.